Traders, I want to welcome you to this Fibonacci teaching lesson. I'm going to look at Fibonacci retracement, Fibonacci extension, and then also dual fibs. So what I first want to identify is we're going to take a look here at a 720-minute time frame. And I'm going to start here with just a low-to-low trendline extension. Prices decline here. So the first thing that we want to do is we want to identify the XA leg. And the best way that I've taught this over the last couple of decades is I want to find a sore thumb high, and then I want to find a sore thumb low. So typically I'm watching this. This is an active leg. We really don't have a retracement. Look left right here. You'll see from that swing low to this swing high, that's a static leg. And then as price starts to pull down, we can use that X to A leg to measure. Right here, we have a swing low at X. It dries up to that new structure high. There's A. We get a retracement. So as this leg is declining right here and price is diving to new structure lows, this is still active. So I can start my Fibonacci analysis, but I don't have a solid swing low that is set in the market that I can use. So what we're going to do is just walk forward. There you see that we've got a swing low, we've got a bull move after that, and a potential reversal. So now that I've got the X to A leg, I'm going to come in here and grab my Fibonacci retracement. And again, I encourage you, always take a look at your swing low here. Then I want you to look left and identify the swing high or sore thumb high where it is clear to you that that directional move started. So I'm going to left click at the sore thumb high, which is X. I'm going to pull down to the sore thumb low. We'll call that A. And that X to A leg right now lays in all of your Fibonacci retracement levels. So from this level to here is the 382 Fibonacci retracement. The 50% fib is going to come in right around here. 618, 786, and then there's 100% retracement of the value of this leg. Now what we want to look for is if the market rallies back to the 382 Fibonacci retracement and holds, then it tends to show strength in the underlying direction of the market. So the underlying direction has been bearish. If we get back into that 618, 786, not quite as strong. The buyers were able to come in and bid this market back up. So that said, I'm going to tighten this down. And now we're going to go bar by bar, and we're just going to look at the possible retracement. Now, do I want to just automatically sell the 382 Fibonacci retracement? Not necessarily. I can look for qualified trade signals right here at that, which could be, as an example, because we want to be sellers, we could look for a 2-bar candle pattern. So this might be a doji followed by a lower close. Then you could literally take action, and that would equal a short entry, and that might be sell the next bar at market. Now again, it's going to depend on the time frame. So if I've done my analysis on a higher time frame here, which is a daily bar, I might identify that level right here, the 382, and then go into a trading time frame, maybe a 60-minute, 30-minute, a 5-minute, and then look for a qualified signal. Next candle, we pop up, we hit, in this case, this is the S&P 500, and at the time, price is at 3,000. Now, in this market, that's a big round number, and we note here that price stopped. The other thing I want you to note right there at that point is that we had structure relevance as well. All right, then we pop back up. Now we hit the 382 fib, and right there we have a doji. So if I'm looking at the daily bar, and a lot of our options traders do this, we could look for a qualified entry. So for example, in the options market, there is an order type that says I could place a sell stop below there. And so if the sell stop does come in, it would literally say if this particular market, let's just say that we're looking at the SPY, the spiders, an ETF, if it trades down to this level, then I want to buy a put option. So that might be an example of how to enter that with an if-then thought process. And again, if we're just going to trade the stock, then we could look to sell on a stop below that particular price point. So the sell stop would be at that level. Let's drop in a horizontal line. So we take the lowest low of the doji right here, and then we'd look to sell right there on a stop. And in the course, I get a little more specific into how to use an ATR or volatility-based sell stop. Now, keep in mind, that's going to be a little bit more aggressive. So what could happen, obviously, is we could move down price, move through this level, get elected on the sell stop, and thus be net short, pop all the way back up, and then have a higher close. That's why you might want to wait for the doji lower close. So we do get our doji candle right there. Let's come back in here. And there you see the next bar. Now again, this is tremendous volatility. So what happened here is price opened here, rallied here, and then was rejected. And then as it rolled back over in the afternoon of that session, the sell stop would have been elected. And already that day in the S&P 500, we had a tremendous winner on our hands. But if I waited for the lower close, then obviously the long short entry would have occurred here. So there's a doji lower close entry. Entry number one would be to take the low of the doji if I'm going to be a seller and place a sell stop to enter the market just below there. The more conservative entry, but typically you'll get a worse price, is going to be to do the doji, require the next bar produces the lower close, additional confirmation that the sellers not only came into the market to drive it through that low, but also there was enough selling pressure to keep it below the prior low. Now let's see what the next bar holds. Now you see this sell stop right there allowed us opportunity intraday the next day to take profit. If we did the doji lower close and sold the next bar here, we've got to place our stop above this swing high in order to stay outside of what is the typical volatility. Let's see what our next bar brings in. We come back up and test that level, although we don't hit a protective target as of yet. Roll back over. Again, we almost get a bearish engulfing right here as this body almost engulfs the previous candle's body. And you can see there, we put in a double top. Now, these double tops are going to be much easier to identify in a trading time frame. So I'm going to go from a 720 minute, let's go down to a 240 minute, and then you would see that double top very, very nicely. Okay, now we roll over. Now here we start the sell-off. Now we get our lowest close of the last 5 days. This is a daily bar. And our expectation would be that we'd come down, retest this level. And now if you'll note, on my Fibonacci's here, I've got the 127% fib extension, and in this case that comes in at 2700 S&P, which is a big round number. I've got the 1618 or the 162 extension, which is at 2500, 200 points lower. So just the base Fibonacci extension shows me I've got a beautiful extended target. If the 50% Fibonacci retracement right here holds, which it did, then my minimum expectation is that we would go down and test from here. We'd go down and retest or test that 127 extension. Okay, so remember, when that retracement hits the 382 and or the 50, that's a sign of strength in the sell-off. When they come up and can barely touch that 382 and roll back over, the sellers came back in, took control of that market relatively quickly. And in this case, again, it was 3 bars. We touched it, played around at that 382 to 50% fib. Now we're starting that rollover. So let's see if we hit that 127. Now remember, this is using the Fibonacci retracement tool. And all I'm asking fibs to do is take the value of this leg, whatever it is, whatever time frame, whatever market, it does not matter, and then show me where is 127% of that directional move right there, of the XA move. All right, so let's see if we roll back down. There's our first target at 2850. So again, the 382, this would be 3050. That's a 200-point move in the S&P. Again, tremendous volatility right now in this market. Not only that, but we have a lower low and a close below the A leg right here. Okay, so this is the XA, and then here's A up to B, and then this is the B to C leg right there potentially, or some of you might know it as AB, CD. All right, so let's continue forward. We get a open right at the prior session's close, press all the way down right to our 127 extension intraday. We stop on a dime and then rally all the way back up to 27.91. So again, massive directional moves, but here our 127 has been attained. Not only that, but we have a new structure low and a lower close, and thus we have a new leg that we can draw from for Fibonacci analysis. All right, now let's do this. Let's come back over here and let's grab our fibs. Now remember, I've got a new sore thumb low. Look left, where did it start? There's my sore thumb high that led to this directional move to this new structure low. So I've got a new XA leg. I'm going to delete the prior fib, and now we're going to focus on the one on the right side. Now again, I'm going to pull this up. Now I want you to note right here. I want you to look at market structure. Okay, so the XA leg is in. It starts right here. We'll get rid of this and pull this down. So I've got back-to-back-to-back market structure. I've got the low and the close here. I've got the next candle's open, the next candle's low. So I've got 3 consecutive price points right there at the 2870 handle. Now this level also happens to be the 382 Fibonacci retracement. All right, so I want you to write this down. Let's come in here and grab the text tool. Okay, so we have a point of confluence. And the confluence is support, all right, that's a level where support meets the 382. So a previous area of structure support, once broken, anticipated resistance, one of the base tenets of everything that we teach. That's in your core course, and the 382 Fibonacci retracement. So we're in a bear trend. We would anticipate that if price rallies and stops at that 382, then again our minimum expectation would be the market to pull down, roll back down, and go grab that 127 extension, and then possibly further. Remember, previously we had a 1618 extension at the 2500 level. Next candle. We test a 2700 again. We put in a pin bar. Pretty significant reversal candle, potentially. All right. Next bar, we go right to that 382. We touch it. So what I want to do is come over here and let's grab the rectangle. And those of you that are SR specialist clients, these are the levels that you'll get in real time, so you'll have this before price even rolls into it. We do all the professional analysis on this side to identify these key areas for you. And then we'll teach 3 different signals that you can use to get short in this area. So as price rallies in here, you know exactly where your entries are, exactly what your risk is, and what your reward is. And again, this easily produced a 4R trade. So in other words, the level of risk is 1/4 the size of the potential reward. So price rolls back over. We expect a retest of the 2700 handle. And you can see there, it toyed around inside of that range, which was a 150-point range in the S&P for a couple of daily bars. And then there, that support level that we had found right here gives way. We have a massive bar, and we go right down to the 127 extension, and again, a big round number. So any short entries right here, take partial off on a retest of these lows, let the balance run, and look for it to roll down to that 127 extension. Not only that, but guess what? We just made a new structure low with a lower close. So we have another fib level. So I'm going to pull this over. We're going to go grab our Fibonacci retracement. There's my new structure low, lower close. Look left. This is the swing high where it started. I'll pull the fibs down to that level. I've got a 127 here, and now I've got a 1618 here, a 1618 from a previous level here, Let's see what happens. We press down. Remember, we had a previous level at the 2500. We easily go attain that 2500 target, and now we're looking for a potential massive reversal zone down here at 2420 to 2450. Comes down, you can see we move into the 2400, press all the way back up, and we close at 2506, and then there is what happened over the next several days. Okay, so a couple of the keys. Number one, you want to identify a significant, or what I call a sore thumb high. I want it to stick out like a sore thumb for you on the chart. So one of the things that you can do to improve your level is A, you can go identify sore thumb highs and lows. B, you can add a simple indicator that every charting package I've ever seen has, and I'm going to pull it in, and literally it's just a swing indicator. What it'll do is it'll identify significant swings in the market for you. So I'm going to go in and we'll find the swing indicator. And you'll note right here I've got a swing strength set to 5. So I'm going to apply that. And now you can see that this indicator is going to remove the subjectivity for you. So it's no longer a subjective thought process. So here is a swing high. In order to get a significant swing 5, that means I have to have 5 lower highs on the left, and then I need 5 lower highs on the right. When I get those is when this will plot. So from the swing high, it did not plot here. That's bar 1, 2, 3, 4, 5. That swing high right here plotted at the close of the 5th candle on the right side. Now, I want you to note, we have a swing low here, a swing high here. Watch what happens when I take my swing strength and I go down to 3. Now, you'll see my swing would have plotted 2 bars earlier. So at the close of that 3rd bar, that swing high plotted. Now I've got another swing high here, and now you can see I've got significant swings that I can apply. Now what I do is I teach all my clients to apply that 2 times. And I want to swing 3, which is a Fibonacci sequence number, and you can make these swing highs, whatever color you choose. And then I want the next set of swings to come up, and let's go a swing 8, and we call that the swing major. And on the swing major, I'm going to make these, let's go blue, so they're going to stick out. And instead of the solid dot, I'm going to go dash dot. We'll make this one blue as well. And it'll be easy for me now to identify the major swings from the minor swings. So let's left click and apply that. Now you'll see it's a little more difficult. I had a swing minor here and a swing major here. I've got a swing minor here, no swing major. Swing minor, no swing major, swing minor. So it's that dash dot that is making it a little more difficult to see. So I'm going to go dash here. And then I'll go hash right here, left click apply. Let's see if that makes it a little bit easier to find. Let's go apply. And now you can see that these dashes and then the dots right behind it appear. Find a way that you can identify that quickly. Let me go the dots. We'll take that to a 4. And then left click apply. So look left, swing major, the dashes, swing minor, the dots. And that'll help you now identify in a very, very objective fashion. Here's a swing, down to that swing. There's my fib. I've got this new structure low. Look left, swing high, there's a new structure low. And that'll help you in your Fibonacci analysis. Okay, so number 2, look for areas of confluence. In this case, we had a market structure support zone that found confluence at the 382 Fibonacci retracement of that swing to that swing. That helps that level gain significance. Hopes that helped. Be sure to check in. If you like the video, click on the like button and then hit subscribe, and I'll see you in our next lesson.